Hello ladies and gentlemen, this is your teacher Usman Ali and we are discussing exercise 5.9 in the video. The technique of the video is different as compared to the other one. I'm not using any camera because the video is technical, the numerical is technical and it needs quite a comprehensive discussion, so that would cost you in MBs if I recorded with camera. So we are focusing on screen recording today, okay? Now, the numerical is regarding a partial balance sheet of a company given to us. The date is 31st December 2004. And actually, the following errors in the corporation's accounting has been discovered. So the accountant of the company had made some certain mistakes. So obviously, these mistakes gonna bring changes actually to the balances given to us here, okay? Now, in order to solve this numerical, I'm using an Excel sheet as well that can help me to solve it. My job is actually to calculate the adjusted balances, okay? Because when I would see how this information affects these accounts, so obviously there will be adjustments needed, okay? One thing. The second thing is that we will shift the unadjusted balances of all the accounts here. Like if you see the cash, we have $40,000, so I will shift $40,000 here. Then in the account payable we had a balance of $61,000, so I will shift the unadjusted balance of $61,000 here. Then in the third we had inventory had a balance of $1,71,000 unadjusted, so I will write it here, $1,71,000. Then account receivable, now we do have a net value of 82. I'm not considering here net value. Why? Because of this information of account receivable and note account payable are recorded as gross, so I'm focusing on the gross, which is 89,000 here. So I will shift the unadjusted balance of 89,000 of account receivable, and in note payable we had an unadjusted balance of $67,000. So I will shift these values here. Now my job here is actually to see how these these four kind of what you can say in events or information can bring changes to these balances here. That's actually our job here, okay? So let's go through it. Now in our first transaction we had January 2005. Now this January 2005 is different from what we are considering. We are considering 31st December 2004. So obviously there is a problem here. In January 2005, a cash payment or disbursement was entered in the books of accounts, okay, as of December 2004. So transaction or the money was paid in January 5, but it was mistakenly recorded in December 4. Included a payment of account payable in the amount of $39,000. So the payment which was made, it was actually made to finish a liability. So at that time our entry would have been like this, that account payable debit $39,000 because liability decrease is debit, okay, and then we gonna credit the cash by the money which we have paid. Now an additional information to us is on which a cash discount of 2% was taken. So it means we did not pay $39,000 exactly. We paid 2% less. So out of this, 98% of $39,000 was paid. 2% was actually a discount that was received. So let's see how much money is actually paid. So if I multiply this, or let me do it like here directly, because before recording the numerical, so I just wanted to make sure everything is working well. So $39,000 was the liability. So 98%, which is 0.98 of this liability was paid. 2% money was not paid because we received a discount from our supplier. So the money that was paid was actually 38,220. This was paid, and this transaction was mistakenly recorded in 2004. So if I want to reverse it, if I want to rectify my mistake, so this minus payment means minus of cash will be reversed to plus of cash. So what I will do, I will plus this 38,220 balance, this in back into the unadjusted balance. I will plus this 38 with 40,000, okay, and we call this, let's say, as cash reverse, that was a cash reverse here. So I hope you got this point. Now if I'm reversing the cash which was one part of the transaction. It's a double entry system. One part was cash, the next part was account payable was debited by $39,000. So that debit will also be reversed. So debit will become credit, or liability decreased. Okay, so $39,000, I will reverse it, which means liability will increase again. If liability will increase again, so that $39,000 will be plussed again to the unadjusted balance of the account payable. This is how you will actually adjust the first, which you can say the event given to us. I hope you got the point. Next, the inventory included $27,000 of merchandise that has been received at December 31st. So you received on the very last day of the year, you received inventory worth $27,000. Okay, now, but for which no purchase invoice had been received or entered. So you have not received any purchase invoice till now. Okay, further it says, means till that day, okay, which is 31st December. Of this amount, $12,000 has been received on consignment. It means out of this $27,000, $12,000 was a consignment. So consignment accounting is different. Consignment, it simply means that I am a consignee, I am an agent of a company in a particular city, region, country, and the company delivers the product to me with this commitment that I will actually sell it on behalf of the company and I will take my commission. So actually in consignment accounting, this $12,000 is not even my inventory. It will not be shown in my balance sheet actually. Remember this thing. So in this $27,000, $12,000 of consignment inventory is also present, which was mistakenly like kind of recorded. Okay, remember this thing, mistakenly recorded. So what does it mean? It means if I want to adjust this consignment thing, so what I will do, I gonna subtract this thing actually. I'm repeating my words. $27,000 worth of merchandise was received, though invoice was not received, but it was kind of, if you can see here, the remainder was purchased on FOB destination. So FOB destination, technically it means as soon as I have received the inventory at my doorstep, I am a customer, that's it, inventory is mine, ownership is mine. Okay, we have two FOBs now, FOB destination and FOB shipment. So shipment behaves a little different from destination here. So what I did was that, like, I received an inventory worth $27,000. Okay, out of that inventory, $12,000 were actually what was that? Actually, it was a consignment. So what the recordings of $27,000 plus of $27,000 to the inventory, it was mistake. Why it was mistake? Because in this 27,000, 12 was consignment, which is not even my inventory. So I need to reverse this 12,000. I plussed it. Now in reversing, I will minus it. Okay, so if I come to the inventory here, 1,71,000, from here I will minus 12,000 from here. Okay, so that would be taken as a minus adjustment, and that adjustment is because of the consignment. I hope you got the point here. Okay, then another thing here we have here is okay, that's it, 27,000 minus 12,000. So we got the point. $15,000 remaining, which is the FOB destination purchases. How I'm gonna make the payment there. Okay, because if no invoice is received, it means no liability will be created then. Is it okay? It's something like I have recorded the inventory, I have increased my inventory account, but if no purchase invoice is received and not recorded, means has not been received or entered, no purchase invoice, so I have not recorded the liability. It means if I had to adjust it, if I have not recorded the liability, means account payable, I have to record it now. If I am recording account payable, what it will be? It will be a plus, because my liability will also increase then. Okay, think of this. One part was done, inventory was received, inventory was increased, it was recorded, invoice was not received. So if no purchase invoice has been received or entered, it means it is not entered as well. If it is not entered, I have not entered any liability also. Now I have to enter the liability because I have received the inventory, so I'm liable as well. It's a kind of mistake here. How much? 27,000 minus 12 is equal to $15,000. So $15,000 liability was mistakenly not recorded, not increased. Increase in liability is kind of a plus thing. So I will increase my liability by $15,000 plus $15,000 to the account payable because I just had a FOB, destination purchases of inventory. So I hope you got this point as well. Let's go to the next point now. Our next information given to us is number 3, sales of the first 4 days of January 2005. So we had a sale in 2005, January, okay? And where we are, 31st December, like we need to do adjustments for the last year, not January 15, okay? So that's again very much obvious that there is a mistake here. So sale of the first 4 days in January 5th, 2005 in the amount of $30,000 were entered in the sales book of the previous year. So again a mistake. $30,000 was added plus to the sales of 2004, which is wrong. I need to reverse it. I need to adjust it. If it was plus, I need to minus it. Okay? Now, so out of this $30,000 or of these $30,000, $21,500 was sales on account. Means account receivable. So when you sold products worth $21,000 in January 2005 and it was on credit, means account receivable increased. If you sell a product on credit, account receivable increased. How much account receivable increased by? $21,500 account receivable increased. So if I'm talking about that I will reverse $30,000, what does it mean? It means this account receivable which increased, I will reverse it back. Means I will decrease the account receivable by $21,000. Okay? Decrease the account receivable. Decrease the account receivable means minus the account receivable by $21,500. So let's go there to the Excel sheet. Decrease the account receivable means minus. Okay? And what was the amount that we had? The amount that we had was $21,500. So I'm reversing that thing, the effect of that wrong sales recorded in the wrong place. So this will be minus, decrease in account receivable, because when the $30,000 sale was made, so at that time, this caused increase in the account receivable, $21,500. So what about the remainder? 30,000 minus 21,500 is equal to 8,500. The remaining 8,000, the remainder 8,500 were cash sales. So that $30,000 when increased, so it increased account receivable by 21,500, which is reversed. I have done that. Now remaining 8,500 was cash. So our cash also increased by 8,500. Okay, now I'm going to reverse that thing also because it was mistakenly or misplaced. So I will decrease or reverse the increase of that cash. Decrease of cash means minus of cash. How much minus of cash? That's my cash. How much minus of cash? $8,500. Okay, so actually there was, just to explain, there was a $30,000 sales made. Okay. Out of that $30,000 sales, 8,500 money was received. So I actually in the past I plussed it, and out of that 21,500 sales were made on credit. So it increased my account receivable in the past. Now that if I am adjusting this 8,500, it was a plus in the previous time, now it's minus. It was a plus 21,500, now it's minus. So I hope you got this point that we are reversing and then how it's connected actually. Let's go to our fourth point. The fourth point says that cash not including sales. So transaction 3 or information 3 was related to cash but sales related cash. Okay, this one is cash but not related to sales cash or cash sales. We received money but from other than sales as a source. So from where we receive money? 1. Collected money or collected in January 2005. So we collected this money in January 2005 and we need to prepare the adjusted partial balance sheet for 2004. So surely there is a mistake here again. So collection was made in January 5, but they were mistakenly entered on December 4. Okay, how much mistake was there? A total of $35,324 was added plus to cash. Okay, I will, just for your reminder, I will write here how much money was added to cash. 35,324, if you remember, was actually the money which was added to cash mistakenly. Because why it's a mistake? Because it was related to January 5 but added plus recorded to 2004. Now I need to reverse it. So if I'm reversing this 35,324, it means I must minus this actually. When I minus all of this money, so then that's it. My adjustments will be made. The net result would be 0. Plus and minus will become 0 actually here. Okay. So let's see. Now, the details of this 35,324 says of this amount, 23,324 was received on account after cash discount of 2% had been deducted. Is it okay? So it means that out of this 35,000 something, we received 23,000 something. Okay, money was received. When it was received? January 5. From which source it got received? It received on account after cash discount of 2%. So it means that our customer paid us money and we received this money after the subtraction of 2% discount. So actually our customer or whoever the person was paying us money, he had a liability of more than 23,324. Is it okay? So I will subtract this account from the cash, which is like minus $35,324 was plus in 2004 mistakenly, because this money was related to 2005. So I just minused it in order to adjust it. Okay. So far so simple. Now this 35,324, what was the source of that? Because whatever the source of that, it's a double entry accounting system. If one thing is plus, so obviously there would be other things that will also get affected actually. So why we were receiving this money then if it was not a cash sale? So we received this money like out of this amount or of this amount, this amount of 35,324, out of this 23,324 was received on account after cash discount of 2% had been deducted. Means we received $23,324 money from someone, let's say Mr. Ali. The nature of that receipt could be any reason. Okay, let's say. So we received this money from Mr. Ali, 23,324, and this money is after the subtraction of 2% discount that we have given them. As you know, because of credit terms, we give what you can say motivational packages to our customers or people who owe us, that if you return my money quickly within this time frame, you will be eligible to get 2% discount from me. So 2% discount is not present actually in this money here. Okay, so let's calculate then what was the total amount of receiving. So look into this detail. Let's look into the detail of this thing, how to calculate or how to utilize this 2% into the matter. Okay, story is 23,324 amount was received actually based on the accounts, and from this 2% discount is already subtracted. I want to know that what was then the total amount of money actually then. Okay, so this is the question. What we have in hand is right now that let's say Mr. Ali paid us the money. How much Mr. Ali paid us? 23,324. What do we know is there was a 2% discount on the money, and then after subtraction the money was paid to us. Okay, this is what actually we know now. So let's do some basic calculations here. Now we received some money. How much we received? We received $23,324. The money that we received is actually 98% of the total. Why 98%? Because 2% was discount. So if this is the total is 100%, okay, then it's very much 100% minus 2%. So the remainder that we get actually here is 98%. So the money that we are receiving is the 98% of the total. So if I put that into the equation, 98% would become 0.98 multiplied by the total receivable. And received value, we know that. I don't know the total receivable. So if this is a multiply sign, if I shift 0.98 to the opposite side of the equal to, so the multiply will become divide. If you can see here, 0.98 shifted to the opposite side, it became like 23,324 divided by 98%. When you divide it, you get a total value of 23,400. Now, so the total value is 23,000, not 400, sorry, 23,800. This is my total. That's 100%. So 2% of the 100, 2% of the total was my discount. That's calculated here. 2% of the total, 23,800. This was my discount. So actually, the money in my receivable, which I was expecting from Mr. Ali, let's say, if it is Ali, I was expecting 23,800 from him. He paid me how much? He paid me 23,324. So I have already reversed the cash money. The total of the cash is already reversed. I just want to know that when I collected the cash, so which accounts got affected, so that I can reverse those accounts also. Is it okay? So out of this 35,324, I actually received at that time 23,324, okay, in cash because of my receivable. I received this money. Is it okay? But actually the money which I received is not equal to the money which I wanted to receive. I wanted to receive not this money, I wanted to receive 23,800. You know how it is done, the calculation. So what I will do, I will reverse 23,800 here. So the reversal of the account receivable would be that I will add back this 23,800 back, okay? So there could be a little bit confusion that, okay, so we received 23,324 and we are adding back 23,300. So let's even discuss that one another technique of getting the answer actually. So let's go back to the time when the money was received. So actually we received money of 23,324 against account receivable of 23,800. So when we received this money, we decreased the account receivable by 23,800 amount, and 2% was the discount money actually. Okay, so discount money, we are not discussing it in this numerical because that's related to income statement, and we are only discussing current assets and current liability here. Okay, so if I am reversing this, okay, so what will happen? Account receivable will go up here 23,800 and like this gonna come back here. So it's something like I will subtract 23,324 here, and I'm gonna plus it back, because when the cash comes in, so the reversal of that would be the account receivable will once again will be debited, because here it was kind of like credited that the account receivable finished. Now that account receivable was created again, so we added it up here. Okay, then the last thing in our what you say information number 4 is this thing that the remainder represented the proceed of the bank loan. So $35,324 we have already reversed it. This one, this 35,324 includes two things. One, it includes the money which we received, 23,324 based on the account receivables, and if I subtract this 23,324 from 35, we get a remainder of 12,000 actually. So this $12,000 which we received in January 5 was a bank loan. Now we are not given here any account by the bank loan, but as bank loan is a contractual agreement and note payable is also a contractual liability, so we assume that this $12,000 cash that we received was added here, and the liability was also created here. Now that we realize that we made a mistake of recording a wrong transaction time period into like a wrong transaction into a wrong time, so we need to reverse this thing back as well, which means if we want to adjust this also, so just like we reverse the cash here, the 12,000 effect of that, I've already written it here, so it would be like minus 12,000 also. Okay, why it's minus 12,000? Very simple. Look, when I took the loan, so I plus 12,000 here, everything was fine, and then after some time I realized that, oh, this loan which I took was in January 2005, and I have plussed it to 2004. This is wrong. So what should I do in order to rectify my mistake? Okay, if you want to correct it, just take it back, means minus it, minus the liability, which means that as of 31st December 2004, I did not took a loan, so I was not liable at that time. That's why I need to minus it. Is it okay? So these are all the what you can say the adjustments needed in the balances. If I want to know that what will be the adjusted balance, so I can individually calculate the sum of it. Okay, then I can calculate the sum of this one as well, and so obviously there are minus signs as well, they will be adjusted accordingly. So we get the sum value here. All of these values are actually here with us. Okay, and then these adjusted balance, we will shift it to where? To this partial balance sheet of ours. We will recreate the current asset section and the current liability section for the company actually. Okay, so let's do it then. Okay, so this is a prepaid format for the company actually. I just wanted to save time, so I've already done it. Okay, now let's bring the cash balance actually. So we had adjusted, prior to adjustment it was $40,000 as you can see here. Okay, and now after adjustment it's 34,396. So I will bring it here, 34,396. This will be my adjusted balance for the cash. Then for account receivable, our unadjusted balance was 89,000 and now it's 91,300. So I will bring it in the sub column 91,300. Why? Because we had an account receivable also, the allowance for doubtful account, which is 7,000. So I will write here this thing, you can say minus 7,000 actually. Okay, and then we had the inventories, or by the way, sorry, when you subtract 7,000 from 91,300, so we get a value of 84,300. Okay, then let's go for let's see if we have any adjusted inventory. Before adjustment it was 171, the inventory value now it's 1,59,000. So I will shift it here, 1,59,000. Okay, and we got prepaid expenses also, so we did not had any adjustment for prepaid expenses here. So whatever the value was, we will use it as it is. Prepaid expenses 9,000. I'm gonna use it here, 9,000. Okay, and then we had two accounts in the liability side, account payable and note payable, which both of them were adjusted actually. So the adjusted value of the account payable is 1,15,000. I will write 1,15,000, and the adjusted value of our note payable is 55,000. So we will shift 55,000 here also, and that's it. We can find the total of the current liability, 1,70,000, and we can get the total of the current asset as well. Let's take that. I can bold the values as well. You can write there the total of current liability. Okay, and the total of the current assets also. Okay, the one of the thing is that as we were not required to have the full balance sheet, it was just a partial balance sheet. So we just calculated, and you can see that their values are not coming balanced because this is not the time to balance them. Actually, the real time to balance them is the total assets should be equal to the total of liability and equity. Okay, so what did we did? We were actually given a numerical here, a partial what you can say balance sheet comprises of current assets and current liabilities only. Then we realized that we made some mistakes, okay, and those mistakes are related to this information given to us. So obviously these mistakes will be adjusted, and when you are adjusting, so the dollar amount shown here will also get adjusted too. So what we did was we actually tried to start with the unadjusted balance, and then we did adjustments. Okay, so with the help of that we calculated the adjusted values, and based on the adjusted values the balance sheet was actually prepared. So this is it from the exercise 5.9 actually. Thank you very much, ladies and gentlemen. Stay safe.